Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Oil markets just experienced their largest single-day percentage surge in history, and crypto markets felt the shockwave. Bitcoin is navigating an unprecedented geopolitical storm while traditional markets crumble around it. Crude oil exploded nearly 30% on escalating Iran-Israel conflict, hitting $114 per barrel on Hyperliquid before G7 nations discussed emergency strategic reserve releases. That spike wiped out almost $40 million in liquidations on tokenized oil perpetual contracts, with $36.9 million from short positions. Iraq's oil output dropped 60%, tanker traffic through the Strait of Hormuz collapsed, and Iranian missiles expanded attacks into Saudi Arabia and Bahrain. Bitcoin currently trades at $67,599, showing remarkable resilience compared to traditional assets. While crude surged, Asian equity markets suffered catastrophic losses. South Korea's Kospi plummeted 16%, Japan's Nikkei dropped 6.5%, and Taiwan's TAIEX fell nearly 5%. Yet Bitcoin only declined modestly, suggesting it's decoupling from traditional risk-off behavior. The crypto divergence became clearer in Japan, where Bitflyer exchange volume surged 200% past Binance and Coinbase. Bitcoin gained 2.05% against the yen versus 1.86% against the dollar, as Japanese traders repositioned into digital assets while equities collapsed. Veteran strategist Ed Yardeni raised the probability of a US market meltdown to 35% from 20%, driven by oil above $100 and the strongest dollar week in a year. He stated the US economy is stuck between Iran and a hard place, with higher oil threatening both inflation and employment simultaneously. Bitcoin's correlation with equities explains only 25% of its price movements, with the remaining 75% driven by crypto-specific factors like ETF flows and regulatory developments. In regulatory news, the US Treasury is urging Congress to grant crypto platforms legal authority to temporarily freeze funds linked to suspected illegal activity. The recommendation seeks a safe harbor allowing exchanges to voluntarily hold digital assets during investigations, addressing the speed mismatch between blockchain transactions and law enforcement capabilities. Tokenized real-world assets crossed $25 billion in on-chain value, nearly quadrupling from $6.4 billion 1 year ago. 6 asset classes now exceed $1 billion each. However, only 11.8% of tokenized stablecoin supply is deployed in DeFi protocols, with 88% sitting idle due to compliance requirements. Bitcoin spot ETFs broke a 5-month outflow streak with 2 consecutive weeks of positive inflows, attracting $568 million this week and $787 million the prior week. Ethereum also posted its second consecutive week of inflows at $23.56 million. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.